Hi guys, this is Matthew Frailey with a quick intraday update for Monday, September 30th with the Breakpoint trade. So again, this is going to be a quick update, not one of those 45-minute videos. So first off, here's a daily chart of the S&P. As you know, the market is getting absolutely pummeled today. Not surprising. Big follow through sell-off from last week. S&P is down 86 points. The Dow is down about 620 points. So this first daily chart of the S&P, we've been talking about this all year long. We've had these shallow corrections. So, these shallow corrections down to the 50-day, sometimes we undercut it by a day and then recovery, right? We've had 6 of them this year, okay? And then the last 4 have been coincided with weakness and options expiration and then quick recovery and then new highs, okay? Now, if you've been seeing my comments, I've been talking about, for the last 2 weeks at least, I've been saying we're likely not to see lucky number 7. I did not think we were going to, replicate this past activity. And you can see that's exactly what happened here. Big gap down today and gap and go. So no lucky number 7. This cycle is ended, not surprisingly, guys. So pretty ugly day here. VIX or the MACD now testing its 0 line. So let's go ahead and take a look at some of the other indexes, and I'll also come back to this one. So here's the S&P, another daily. So far we're about 200 points off the highs. So to give you a little symmetry indication, so clearly larger than these last 4 corrections, well, last 5, and we had one correction back here in March. From February to March, about 230 points. So if you look at this chart here, just from a simple technical standpoint, these highs in May and June are now technically support. You can see became support here. So previous resistance becomes support. So now this is a target area. Now, when you get down to this point, the big question is you have the 200-day moving average, which isn't that far away at that point. Could be a magnet over time. I don't think we're going to go straight to the 200-day moving average, but you never know. Remember, we like to say this about the markets: stair step up, elevator down. It always falls faster than it goes up. You could have a day in the market take back weeks of gains. Okay, so this is likely a target area initially. Maybe then you get some sort of, rally up, lower high, then another sell-off. Maybe that eventually tags as 200-day moving average. 200-day moving average is upsloping, so it would eventually catch up with price. So we'll see. Okay, let's move on. Here's the longer-term daily. This really long rising wedge. This broke down, back tested. Now this ultimately measures down around the 200-day moving average. Again, I don't think we go straight there, but it is a possible target over time. Here's a 5-minute view of today's action. You can see gap and go and just continues making new lows, currently down about 90 points. One chart that concerns me longer term, and I've talked about this, is this monthly chart of the S&P with a moving average ribbon. How wide it is. Remember, these ribbons, they go through periods of expansion, contraction, expansion, contraction, expansion. This expansion phase just blows everything else out of the water. In order for this to correct, it could take a large correction in price to do that, or it could take a smaller correction in price, but a much longer consolidation, like a year or more. So who knows? That's my biggest concern longer term. Look at another chart, the Dow. So the Dow is pretty clear here. The Dow has been going sideways that allow these shorter term 20, 50-day moving averages to flatten out. That's when you're more susceptible to bigger corrections. We broke this almost 2 weeks ago, and big gap and go today. The next obvious support is right here. Okay, this zone right around this June lows. Notice how if we get down to here, likely the 200-day moving average would be caught up. Remember, I talked about this on the weekend, and let me draw this in here. I talked about how this was an area of a little support until you get to here. You got a big support zone here, and then below that you got kind of another gap area. This is an area of little support. Then you So you can see how these support areas, you either hold them. If you don't hold them, then you get these air pockets. So these are your air pockets. Again, right now we got a big support here. Let's clear that and move on. Here's a weekly view of the Dow. This rising wedge we've been showing for several weeks now. Started breaking last week, and you can see basically hitting its initial target here. But again, this is just an initial. Like I said, to me, the Dow, this area is your obviously first support area. What else can we look at here? Let's take a look at the Nasdaq. So we lost this 370 area right on a gap. You could have a little support right, potentially. Let's go ahead and draw that in. There could be one kind of right in here. Below that, otherwise you got this air pocket to 350, and then you got a area down to here. Okay. So moving on to the Russell. Big gap and go down today. Here's your 60-minute. Been in this zone for a while. And of course the 60-minute. Remember I talked about this open gap? Well, lo and behold, that is being filled this morning. We'll soon, well, it's actually 12 Eastern. It's 11 a.m. Central where I'm at. Here's the VIX gap. Remember I talked about the Bollinger Bands. Upper Bollinger Bands were flat. That allowed for a big move outside. Well, that's what we got today. And not really going to go into too much else. I don't want this to be a long update. Here's uranium. That's had a pretty good correction. You might want to watch the 20-day moving average here. That could be a little target or a little bounce area. Again, I don't think it goes right to new highs. You know, maybe it gets some sort of, you know, bounce lower high and then another decline. So what else can we look at? Bonds. Let's take a look at that real quick. TLT up in this big coil. If you're long this, I would put a stop right here, this higher low, right there. And 10-year treasury yields down a little bit today. Crapple, look at Crapple. Oop. This was bearish, breaking that. Lost this support. So if you notice, guys, you know, we were in this, what I call air pocket. We really don't have any support to this 136 area from the April highs and then the 200-day moving average. Microsoft, that had a double top, and that's playing out. 50-day moving average here. All right, guys, that does it. We will see how today closes out, and I will be having a video for, this evening for Monday's newsletter. Talk to you later. Take care.